This is Peter Hans, and welcome to this week's episode of Between Two Chains. This week is exciting. We're going to talk solely about Bitcoin and Bitcoin mining and the energy impact. I'm joined by Sazmining CEO and co-founder Will Szamosszegi. Will is really knowledgeable on the energy space and on the Bitcoin narrative, and we have a really interesting discussion that I think everyone's going to enjoy. The company grants access to anyone who's looking to mine Bitcoin in a really easy way, but importantly from 100% renewable energy sources, which is really cool and interesting. So we do spend a lot of time talking about how methane can be used and some of the innovative ways in which they are tackling energy problems, not only around the Bitcoin narrative, but for power and energy producers. But then we delve really deep into the Bitcoin ecosystem, the narrative. As you all know, I and my frequent guest Jeff are oftentimes critical of the Bitcoin community, and we have a really frank discussion about that, as well as the various use cases for Bitcoin and the differences between it in the US and globally. It was an awesome conversation. I really hope everyone enjoys it. Please rate, review, and subscribe, and enjoy the show. Thanks.
This commentary is not intended to be investment advice, investment research, or recommendation. Please consult your investment professional for your own circumstances.
Hi, this is Peter Hans, and welcome to this week's episode of Between Two Chains. We have something pretty different this week because we are going to talk about Bitcoin mining and renewable energy, and we don't spend a lot of time at all on Bitcoin on this podcast, but I'm definitely looking forward to it. I am joined by Will Szamosszegi, who's the co-founder, and CEO of Sazmining. Will, welcome.
Thank you so much for having me, man.
Yeah, absolutely. So there's a lot of ways in which we can start. And one of the criticisms, I suppose, of Bitcoin over the past, criticism slash narratives has been energy consumption. Large amounts of energy consumption required to mine Bitcoin, which is both for security purposes, right? It's not necessarily a flaw in the system. It's by design. But there are narratives that both sides will attach to in the discussion of the merits of Bitcoin and Bitcoin mining. So you guys, I think, very uniquely are focused on renewable energy. And I have heard a lot over the past couple of years about how mining for Bitcoin encourages investment in renewable energy sources, which I think is true in theory, but harder to implement. So I was really, relieved to see your approach. I think is a little less naive than that, about how you can actually benefit the grid and energy companies by offering really different kind of revenue opportunities. And it clicked a little bit for me. So I'll stop talking. And why don't I kick it over to you and just tell a little bit about yourself and how you started the company.
Yeah, great question, and a lot of good points there. So if you wind back the clock and you look at the industry in 2018, that's when Sazmining started. We came into the industry, and when I came in, I didn't really understand how powerful a tool Bitcoin mining was for the energy sector. And very quickly I realized, wait, the energy sector has all of these inherent challenges. We almost take it for granted, right? When you go flip on the lights, do anything, that requires energy and it always works. But actually planning around that is a very, very difficult task. And so when you look at Bitcoin mining, you might ask yourself the question, why is Bitcoin mining so great for the energy sector? Why can it make grids more efficient? Why can it help promote renewable energy? And to the heart of your question, the reason why Bitcoin mining can do these things is because it can create value by generating electricity anywhere in the world, and it can be shut off on a dime. Now, those are the characteristics, but to really understand this, let's give you an example, right? Let's say that you're an energy executive and you've got a bunch of oil wells, and those wells are leaking methane. Now, methane is 84 times worse for the environment than carbon dioxide, and you've got a choice. You can allow your wells to continue leaking methane, or you can pay $100, $150K per well and plug it up. Now, as the CEO of an energy company, both of these options suck. you're either going to pollute or have this massive liability to prevent your pollution. Now enter Bitcoin mining. Bitcoin mining can be placed on site, and rather than needing to have pollution or pay 150 grand to plug the well, you can take that methane, that pollution, and use it to generate electricity on site to power Bitcoin miners. Now, what does this look like in practice? This looks like taking a liability for you as the CEO and turning it into an asset, turning it into a revenue stream for your business. And the only reason why you can monetize that is because of Bitcoin mining. If you go and try and generate electricity, you can't just generate electricity and not use it, because it's going to be very expensive to transport. It's going to be very expensive to get the battery technology to be able to hold that. And so whatever it is that you have a new technology with Bitcoin mining for the energy sector. That's the big insight that we've seen. And we're trying to find ways to build a good business model around it that helps people either capture the pollution, reduce carbon emissions, or bootstrap and promote renewable energy assets. And I could give another example there if you'd like, but it's a similar type of thing. If you're an executive and you want to move towards renewable energy, you can't just snap your fingers and all of a sudden have solar panels up and running. I mean, the thing is that renewable energy inherently is an intermittent power source. The sun's not shining 24 hours a day. The wind's not always blowing. If you want to use renewable energy, which is great, you've got to be able to plan around it. Bitcoin mining is a new technology for that. And so my focus at Sazmining has really been, how can we leverage this technology and improve the energy sector, and also get other people to help improve the energy sector. So we've built a platform, and our tagline, as you've mentioned off air before we hopped on, is we make Bitcoin mining as easy as signing up for Netflix. And really that's what we saw as what was needed to be able to get more people supporting this revolution towards capturing pollution and moving forward renewable energy assets.
So the methane example is not what I thought you would lead off with. So I do have a couple of questions there, because it's interesting. And if I'm an E&P company and I'm a shale driller, say, and I have methane leaking out of my wells, what you're saying intuitively makes a ton of sense. But I would imagine economically it's not quite as simple. So I don't know what it entails, but say I do have a well, right, and say I am I have enough methane gas coming out of that well where I can effectively create a power source that would handle X number of rigs. Like, what there's obviously fixed expenses that go into producing basically a data center of some sort, right? I mean, you have to have some sort of, at the very least, like an airplane hangar type environment, right? You have to purchase the rigs and mining equipment. You have to have, an internet signal to that source out in that oil field. What does that investment look like for an energy company, and what is the payback period? Because I guess hearing what you're saying, I'm surprised that we don't see more of this, and that's not even getting into state regulations, say.
Yeah, it's a great question. So I can give you some examples, and there are companies that are doing this, but to your point, it's something that is very early on in terms of the broader industry realizing it. I mean, a lot of miners who are deeper into the mining industry are at least aware of some projects, or they've heard of this concept. But outside of the mining industry, this is really something that if people understood, I mean, I don't want to go down a rabbit hole with like this New York Times piece and all this other stuff that's been happening, but it's been a really just buffet, pick your facts that that fit a narrative to attack an industry or push something forward in many cases. But in regards to the economics here, the most amazing thing about Bitcoin mining is that you're generating Bitcoin from this electricity. So the big input cost is understanding, with all of your infrastructure and operations and CapEx, what is going to be your average cost of Bitcoin that you're producing, right? And if your production costs are lower than the cost of the market price for Bitcoin, then you're in a very great scenario. The good news here is that you're accessing virtually free electricity. Of course, like there's infrastructure costs that are needed. You're going to have to work with the actual generation equipment to be able to capture that methane and turn it into electricity that can power the Bitcoin miners. But at the end of the day, the economics are such that it's still very competitive compared to going versus other power sources, just because of the strength of that economics where you're dealing with a virtually free power source. So for example, there's a company,
100%.
yeah,
I
there's a
mean, the
company
variable
named,
cost is, oh, go ahead. I'm sorry.
oh, no problem. Yeah, I was just going to give an example. There's this company called Vespine. They're actually doing this with landfills. So they're working with methane from landfills, and they're working with one municipality right now, but they're in contact with 12 others that as long as this first one goes well over an extended period of time, they've got ways to expand into more and more projects. And they're acquiring this electricity at half a cent to 3 cents, depending on the price of Bitcoin. That's how they've structured their contracts. Now, this is like cost per kilowatt hour. So just this is one example of a company that's doing it. There's another company called Crusoe that's been doing it with Exxon. But right now, it's very early days for this technology. And taking a step back, going to your initial question, which is Bitcoin mining's environmental impact. What is the true impact that this technology has on the energy sector? The impact that it has is it can help bootstrap stranded assets. It can help accelerate renewable energy assets. And it's already being used to help address the methane problem.
Sure. I mean, it definitely makes sense. Like, right, if you're producing your own input cost in terms of energy naturally, right, the variable cost is going to be, extremely low. And if you're talking about, that price per kilowatt hour, that's obviously very appealing. And you have a direct use for the energy that you can profit off of on a variable basis. But there's still going to be that, fixed CapEx that goes into it, which is going to have some payback period. And that is what, any company that produces methane as a byproduct of their ordinary business. So I guess, say at 30,000 Bitcoin, right? What is the average payback period for that capital investment to go from, hey, I'm producing methane from a well, right, to use your example, to, now I've paid off my CapEx and it's all, profit. Is that a 5-year payback period, a 10-year payback period, a 1-year payback period?
That's a great question. I can even convert it to make it easier to make the analogy here. So
sure.
In a cost per kilowatt hour, the end of the day, your payback does depend on the price of Bitcoin, right?
Yeah.
If Bitcoin is very high, very low, it's going to depend on how much you're actually generating for that Bitcoin. And then you're also talking about how competitive it is to mine Bitcoin, which is another free market variable at play. But what I can give you is when you look at the range between the bear markets and the bull markets, during the depths of the last bear market when mining was at its absolute least profitable, you were looking at still generating 5 cents per kilowatt hour equivalent. And that's at the bottom of the bear market when the mining cost was very, very high. Now, during the bull markets, you're seeing prices where you're generating over 100 cents per kilowatt hour, which is just a massive margin. So at the end of the day, if you're a Bitcoin miner and you're looking at all these variables, you got to find the best time to liquidate your Bitcoin. You got to come up with some type of treasury management strategy. You got to have things built in your models and sensitivity analysis to realize, okay, we're going to be able to safely pay off this upfront CapEx if we decide to sell all of our Bitcoin at 20 cents per kilowatt hour or whatever it is based on the market. Or you look at the previous historical trends within market and the profitability metrics, and then you can say, okay, well, right now we're in a bear market, we're generating at this time. We might cash out this much over time, but it's all planning cash flow. These things are difficult to lay out within a 5-minute conversation, but overall, the economic margins that are available for you if you find a way to mine Bitcoin with methane, your margins are astronomical if you're able to mine correctly. And so that's the big takeaway is like with any business, there are a lot of decisions you can make, but you just got to make sure that you plan around paying off your CapEx and and in Bitcoin mining with methane, you're working with very large margins over a 4-year cycle.
So what is the cost then in CapEx to, and are there other costs I'm not considering? If say I'm a decent size, I mean, a lot like a Chesapeake, or I mean, I know there's been so much consolidation, or an Anadarko, right? Are there a certain number of facilities that they need? Like, how much CapEx are you talking about to be able to convert that methane into a Bitcoin mining data center that is wholly owned?
Yeah, I don't want to misquote numbers because I
Yeah,
don't know the exact number off the top of my head, but I know that the two big variables that you're looking at are the actual CapEx that you're investing to depending on how much methane is coming out of the well, all these other
sure.
things. I used to know the number, but I don't know it off the top of my head.
And
But then
yeah,
you're
it's
also
definitely not
looking at the actual cost of the hardware, which is a big
correct.
variable. The cost of the hardware, it fluctuates so heavily. Think about how much
Yep.
Bitcoin's price fluctuates. For the exact same hardware, you could be looking at paying. There was hardware that was going for $13,000 that is now going for $2,000, just depending on where you are in the market. So, of course, the electrical generation equipment and turning that methane into electricity to generate Bitcoin is an important piece. But really, there's so much margin in Bitcoin mining. The big piece that you got to get right is how expensive your hardware is that you're acquiring. If you're acquiring hardware at $13,000 a S19, then
Hmm.
no matter how efficient efficient your operations are, it's going to be very, very difficult to make that project work. Versus if you're acquiring them at 2,000, you could overpay by 5x on the generation equipment, and you'll still be fine if you plan everything else out right.
Hmm. Hmm. No, and I know that remember from Ethereum, ETH mining back in the day. I started that in 2016, and yeah, back then you could buy the graphics cards pretty cheap, and then you couldn't even find them a couple of years later, and now obviously it's irrelevant. But
Yeah. Well, to your
yeah,
point, like just on the hardware side, this is
yeah,
another thing where that fluctuates so much. It's so difficult to plan around. And honestly, mining is very difficult because you have to become an expert in energy if you want to do it right. You've
yep.
got to understand the supply chain side of the actual hardware. You've got to understand the previous price cycles. You got to understand so many different pieces. And that was the big thing at Saz Mining where we said, look, you have a lot of people who like to own Bitcoin, which I think is great. But you
Hmm.
also have a very large contingent of people that love the return profile of something like a Bitcoin miner. Rather than owning Bitcoin, you get to own a hard asset, aka the Bitcoin miner, and that
Hmm.
hard asset is generating cash flow via Bitcoin. So generating Bitcoin over time. It's like a way to dollar cost average into the asset and a different type of return profile. But we saw that it was very, very difficult. Like your time's too valuable to go and learn to become a professional Bitcoin miner. So you have a lot of people just going and buying Bitcoin. And so that's when we initially started in the industry. We weren't focused on building that product. We were more so focused on becoming experts in mining and understanding how to maximize efficiency, how to evaluate different facilities. And then we eventually pivoted towards what it is we're doing now.
Hmm. Hmm. Yeah, and the angle of really just solely focusing on renewable energy sources, I think is unique because it's not typically the cheapest source of power right now, right, on a variable basis. But I know you guys have um, in essence a hydro facility, I think in Wisconsin, right, and then are bringing on a West Texas plant, and I think maybe one other. And so going back to I guess the issue, because I think this is an important point to really delve into the power grid system and how you're kind of solving for an existing problem within the power grid. It's not just about incentivizing investment in renewable energy sources. So, for example, like I live in Texas. Texas, I think, generates about a quarter of the state's power comes from wind, right? But the issue with wind is not only the input, as you say, like, right, the wind's not always blowing, but demand for power is not always it's never constant, right? And so oftentimes when there is, say, lower demand than the grid that produces, you will have wind turbines that are idle because you can, you produce natural gas, which is cheaper on the margin to deliver than, especially depending on where you are, right? Like a lot of the wind turbines are up in like northwest Texas, right, where you have, Houston and more, East Texas. So then when, demand spikes and you kick peakers into high gear and things like that, right? You put a lot of strain on the system, and Texas is unique because it's they own their own grid, but you can sell your electricity back to the grid. So I was like, all right, and Bitcoin miners have done really well, and obviously, as you know, there's a bill that passed the Texas Senate to kind of curtail the benefits that Bitcoin miners can get from selling electricity back to the grid. But what I thought is really interesting, I think you guys hint at this in some of your writings and your blogs and stuff, is that if you're a power producer, say, right, one of your issues is that, okay, you have, wind or hydro or wherever, whatever solar, whatever alternative source you're producing energy from, and you either are in a situation where you're basically overextended in peak demand, or you have more potential supply than you can sell. But with Bitcoin mining coming into the fray, they are the buyer of that renewable energy source when there is not peak demand. And when there is peak demand, because it's not a hospital, it doesn't have to be constantly running, they can turn off, and you can use that excess demand for hospitals or homes or other peak services. So it actually improves the profitability of the grid and the power producers, while also that buyer is actually like an ideal customer because they don't need the power in the, it doesn't really matter when a Bitcoin miner runs, right? So if it's 110 degrees and everyone's running their AC, the Bitcoin miner will just say, okay, well, turn it off for a little while and you guys use the energy elsewhere. I mean, is that an accurate way to look at it? And are other states, finding things similar in other states?
Yeah, well said. Completely agree. That was accurate. And to take it one step further, you mentioned the bill that they passed. What this is really doing is it is in essence removing the ability of miners to participate in the demand response program.
Yeah.
Now, why is this a bad thing? Well, it's for all the reasons that you just mentioned. This technology that can improve the grid is now forcibly not allowed to participate in the demand response program, which it is best for. So now how are they going to manage this? When you take out the Bitcoin miners from this program, all that you're going to do is you're going to make your grid more fragile, and you're going to have to rely on things like peaker plants. Now, for whether you're for or against renewable energy, I know that some oil and gas guys out there are really anti-renewable energy. No matter where you fall on the spectrum, just the way that things are based in facts are that peaker plants are not efficient. I mean, they're sitting idle for a lot of the time. They're not leveraging a renewable energy source. And all of a sudden, Texas hadn't had to rely on them in the way that they are going to without the Bitcoin miners to be able to participate in this. But why is this so bad for the people living in Texas? I mean, well, first off, all that they're going to do is they're going to drive the miners who have this technology to other parts of the country or to other countries because they're afraid of what politicians might do in terms of participating, their ability to operate and make the most of this new technology. The second thing is when you look at the New York Times hit piece on Bitcoin mining, they are painting demand response like demonizing it, saying that it's bad to participate, acting like the Bitcoin miners during Winter Storm Uri were stealing electricity from the residents who were connected to the grid, which is just the complete opposite of what happened. During Winter Storm Uri, you had a lot of electrical generation that could no longer operate and was forcibly shut down because of the storm. And so there wasn't enough energy to produce and provide to everyone. And so the Bitcoin miners, as part of their participation in demand response, shut off. And they powered many, many thousands of homes. Now, it's ridiculous to say that these people shouldn't have their homes powered because miners can't participate in demand response. It's just absolutely asinine that they're passing this. But we don't need to go all the way down.
I mean, from a procedural standpoint, I think it's unlikely to move forward, right? It passed the Senate. It's pretty unlikely to pass the Texas legislature, and it's pretty unlikely to be signed into state law by the governor. So I think it's unlikely for many of the reasons you lay out. I will say in terms of the, moving to other states or other parts of the country or other parts of the world, like, I think there are benefits for the power grid of kind of what we talked about. I think it's very good for the miners, right? Because they get a profitable source of energy, and then there are substantial profits to be made in selling that energy back, because they are an atypical energy consumer. The miners are, in that the timing is irrelevant. Like, they don't need, it's a low demand, high demand period. It really doesn't matter to them. So they're like, yeah, if you're going to pay us, we'll just shut off right now if it's more profitable. Right? That's really the issue. It's more profitable than just running their mining rig. But I think and I don't focus too much on kind of the media pieces, because they're all very politically biased in both directions. But look, it's not the same as building an auto plant in something. Like, the Bitcoin miners are not huge employers in a region, right? They're bringing some, I guess Texas doesn't even have state income tax, but there are benefits they're bringing, but it's not the same as kind of, moving an industry overseas or job creation or something. It's more squishy, I guess, from like a benefit standpoint.
Yeah. And sorry, go ahead.
No.
I was just going to say that when you look at this, I'm not sure what your views on this are, but I think that adopting free market principles in the long run will yield better results. You're just going to get better results when you go free market versus some other type of system, a more communist or fascist system. And I think that at the end of the day, the most efficient technologies, you want to embrace those, and you don't want to sign into law preventing them. I mean, imagine what would have happened when the internet was in its early stages, instead of the United States becoming a big leader in understanding this technology and pushing it forward and building these big organizations, if we forcibly shut them down or banned them from operating in the US. I think that with every technology and leap in technology, we've seen that the people who adopt it are able to produce better things. And right now we're living in a very interesting time in the world where there's a lot of chaos. I mean, the past couple of years, we've had so many black swan events. I'm someone that personally has paid a lot of attention to monetary policy, paid attention to how all of these things work, more so than the everyday person. And even the everyday person now is looking at their bills thinking, what the heck's going on? I'm able to buy half as much as I used to be able to buy. And I mean, I'll ask you a question right here just to really put it in perspective. How would you protect your money over a 100-year period? I mean, what would you own? What would you buy?
You're asking me how I would protect. So the goal being to maintain value in a dollar basis or purchasing power?
If you just own assets, if you buy, I mean, you could buy anything. You could buy currencies, you could buy real estate, you could buy stocks, bonds, commodities, whatever it is. If you're trying to protect yourself over a 100-year period, I'll actually make it even different than that. Not 100 years from now moving forward. If you go back 100 years, how would you have protected your purchasing power up until today? If you were back in, in the 1900s, 1923, what could you have bought and owned and maintained your ability to purchase over 100 years?
Well, I wasn't alive in the early 1900s. Had I been, and with the benefit of hindsight, I probably would have purchased a considerable amount of land, gold, probably would have invested in, Apple in 2003 and Amazon at $1.75 in 2011. So probably would have bet a lot on sports, knowing the outcomes of all those events.
Yeah, yeah.
But no, I think
Outside of the lottery and some of these other things, exactly right. You wanted to own hard assets. You wanted to own real estate, and then you wanted to have that big upside in those technology companies that had massive returns, the winners. You wanted to pick the winners. Well, right now, when you look at this, it's very hard for you to protect your money today. I mean, like the dollar's basically eroding away, it's melting. It's for the first time that we've seen it in the US. I mean, other currencies, this has been a common occurrence. There have been thousands of currencies, and they almost all end up going towards their marginal cost of production, which is pretty much zero if you can print the money. In the US, guess how much it used to cost to buy to go to the movies? Like in the early days, like about 100 years ago, you could go to the movies on a date. You could buy a movie ticket for yourself and your date for a quarter. I mean, I'm sure I can assure you that it was not as easy for them to produce cinema and movies back then. Everything was just priced so differently. The dollars have lost over 99.5% of their purchasing power. And
well, in some things, look, there's the inflation exists by design in the U.S. monetary system, and I think that is the correct monetary system to have, because if you have a deflationary currency serving as the main currency, people are incentivized not to spend. And in order for an economy to flourish and thrive, people need to spend. They need to invest, right? You don't make capital investments if there's no inflation, because you keep putting it off, right? If everything, and same thing with M1. Like, in order to have a strong economy, you want velocity of money. You want people spending. Obviously, pace of inflation is important, and there are investments, anything from tips to land that does well, to art, rare collectibles that do well over time in inflationary environments. Bitcoin, I don't know. I mean, will it? It certainly wasn't an inflation hedge, nor was gold over the past couple of years. Will it be over the long term? I don't know. I mean, it's priced as I would say it's priced as a call option to an extent. And, will the dollar be, now we're getting into a more philosophical discussion, but like, will the dollar be the global reserve currency into perpetuity? Like, probably not. What does that time frame look like? I have no clue. But what will become the global reserve currency, say, post the dollar? Will it be, the yuan? Will it be gold? Will it be Bitcoin? Will it be, what is it, the Saudi real? Like, I have no idea. No one knows, right? But I mean, the dollar eroding and all this, like, yeah, I mean, it's true to an extent, but versus what is also relevant, right? Versus the euro, versus yen, versus gold. Like, I mean, not really. It's more versus milk, maybe, versus lumber, sure. So it's just I don't know. It's more complicated, I think, than a lot of. And this is my, I don't know, it's a turn off debate. Like, I like Bitcoin, believer in it, but like, there are certain like narratives that it's like, it's not so simple,
Yeah. I mean, these are very, very complex topics, especially when you start going into monetary history and you start looking at how the current monetary system works. I think a lot of this ties to technology, right?
Sure.
So, I mean, let's look at an example of what's happened with COVID, for example, and the amount of money that's been printed, right?
Mm-hmm.
If you have a certain number of dollars around the world, we could just, for simple numbers, let's say $1 trillion represents all the goods and services in society. Every single thing, every good and service, everything that's produced is represented by 1 trillion units of currency, $1 trillion. Now, if I all of a sudden make it so there are 9 trillion more dollars, so now there are $10 trillion, and you have $10 trillion representing the same amount of goods and services in society, inherently things are going to have to reprice. You brought up a great point, which is dollars in comparison to what? In comparison to the euro, the yen, whatever it may be. And this goes down so many different rabbit holes and derivatives and how things are tied to one another. But at the end of the day, you have a certain amount of stuff, and stuff gets made, and services and goods are produced, and the currency is the representation of the value that represents the movement of goods and services in society. Currencies are a medium of exchange, and they help with pricing signals. I think that they serve a very important purpose. But with everything that's been happening, we've seen, as we mentioned, a number of different black swan events, and the big question is in this uncertain world, in a world where you have a reserve currency like the US dollar, and you have the incentive to print, like let's say you're the US and you're printing dollars and you're able to allocate those dollars however you'd like. Well, every other person who's holding dollars, they're not necessarily benefiting from the programs or the spending that you're allocating those dollars to. So I think it makes complete sense if you're the reserve currency and you're able to access that at times where you absolutely need it for your economy to print. But it's like you have a milkshake and you're sucking the value out of the milkshake, and then you're the one benefiting, but everyone else, they're not benefiting from all the dollars that are being printed. Their dollars are getting devalued. And so right now, these are inherent in design with the way that the system is set up. And I'm not saying that it's a bad thing. I'm just saying that this is how it works, and it's how it's worked for all empires over time, or all governments.
For sure.
Eventually you print, and then the currency loses value. These are just data points.
Eventually, yeah. And there's two variables, right? So you can print all you want, right? But the other variable that matters is the velocity of that money, right? So that you can have more of anything, which, supply and demand would tell you there's greater supply with no change in demand, then value goes down. But if that supply is not circulating in the market, then it doesn't affect anything, right? So you need velocity of money to at least remain constant or increase with an increase in supply for there to be value destruction and purchasing power destruction. And look, in some things, your dollar goes less far, whether that be a supply issue or a dollar issue. But I think the issue now is, and this is why, the U.S. is in, or I don't really care about the economic definition, but, going into recession is because that those dollars aren't circulating into the hands of the population, right? There's increased prices in many things, food especially, but there's not necessarily more money flowing to, say, the American household, right? So, that's an issue. There's a lot of things. This all comes to roost when the rest of the world says, I am no longer buying U.S. treasuries, right? Or I'm going to demand a higher interest rate for U.S. treasuries. And that's when, and when that eventually happens, no idea. I agree with you. Like, historically speaking, yes, none of this is sustainable, but are we talking 10 years, 1,000 years, 500 years? No clue, no idea, and if we're talking about investing, or if I'm talking about protecting my personal wealth and stuff like that, I should, and I do own Bitcoin, and I do own land, and I do own, collectibles and things that I think will preserve value vis-a-vis the dollar. But it's by no means 100% of what I'm invested in. But I think you're right. From a technology standpoint, I just think there's not. I think everything you're saying is right. There's just not a lot of answers at this point in time. So it's all just very philosophical.
Yeah, exactly. And at the end of the day, it's one of those things where you evaluate the whole landscape, and no one has the magic ball that can tell you what's going to happen, but trying to find the best way to prepare yourself. On that question and topic that you mentioned in regards to how long the U.S. holds dominance, holds the reserve currency status, many people have been talking about how once we went into the era of extreme money printing, we went into an era that some people are terming Bretton Woods 2. And you might be thinking, what does this mean? Well, it means that people have lost a lot of trust internationally in the dollar. You've seen recent news actually with a lot of these BRICS nations as trying to offload their dollar exposure, as well as they've been trying to accumulate more and more gold. Now, I don't have a crystal ball. I don't know what's going to happen. I'm just looking at what's happening today and what's happened in history. And I do think that at the end of the day, you have to find a place to put your money in. It's difficult today. It really is, to try and find places where you can protect your purchasing power over the long run. I mean, gold, for example, that gold would have been a great way, and real estate would have been a great way to preserve purchasing power over the previous 100 years. The big thing is with gold in most countries, you would have had it confiscated around the world, including the US actually. But then with real estate, you still have these taxes that you have to pay on that property every single year. If you don't have enough money to pay on that property, on the taxes for it, then that's also a certain percent that gets eroded over time. So if you have, let's say, a 5% tax, 5% every single year, 5%, 5%, 5%, 5%, compounding over 100 years, you've lost the majority of your wealth in that building over that 100 years. Now, that doesn't include, the increases in the value of that property, things like that. But these are all things to consider, that in an inflationary environment, you have to protect your value at a pace that outpaces inflation and ideally completely crushes inflation.
Well, I think the point of, say, land is that it at least keeps pace with inflation, certainly historically, and certainly you can't make any more of it, right? I mean, that is kind of the one absolute truth. I don't think you can make any more gold either, though I've heard stuff about mining for it in space, which I'd imagine is fairly cost prohibitive on an LOE basis, but I'll leave that one alone.
Well, the gold production, I believe it expands about 2% a year, because you have miners that are mining for gold and bringing new gold into circulation.
Oh, sure.
The one thing about Bitcoin is that it does have a cap of 21 million. And
Yep.
even if more miners come online, it's not like that's going to change the supply.
No, it doesn't change. It doesn't change the supply. It does. That is certainly true. It does not change the supply. Yeah, I think one of the things I've struggled with, again, and I think we're getting, more into Bitcoin, is okay. So X% has been mined already, 70 something, whatever it is, right? And eventually, the last Bitcoin will be mined in, I remember what the year is, like
2,140.
Yeah, 2140. Okay, I was gonna say 44,
so,
but yeah.
Oh,
So
just,
we got a
just
while.
under 120 years.
Yeah, we got a while. But if so much has been mined already, and let's face it, like it's a very concentrated ownership group, right? Even though I own it, you own it, millions of people probably own it. In the grand scheme of things, it's a very concentrated ownership group. So say Bitcoin eventually does become the global reserve currency, all you're really doing is transferring global wealth from one group to a new group, which, okay, and there are benefits, right? Technologically speaking, from a construct standpoint to Bitcoin. But what history will tell me is that there will be some new uprising. That it's not just like people in 200 years are going to sit around and stack sats because the fifth generation of the Winklevi twins has X wealth. They're going to figure out something else. And again, maybe that's irrelevant right now because a lot of things need to happen, including Bitcoin becoming the global reserve currency. And if it does, it's 50x where it is right now, right? So, but I just think like everything is more complicated than we always make it out to be,
Yeah, and I'm by no means one of these people that believe, all of a sudden, if all of us just transfer to Bitcoin, we're all going to be like
Sure.
flying on clouds and we're all going to be doing whatever, living in some magical utopia. I do think that, to your point, human nature is human nature. And in a lot of ways, just because you have a currency that's based in a more free market unit of account, it doesn't necessarily mean that human psychology changes, that things are all in the world going to get better. I think that the one thing that Bitcoin has is it has that constant. It has that unit of account with a defined set of rules. Now, we might say, okay, why does this matter? Who cares? It's got a defined set of rules. Well, if I ask you how many dollars are going to be in circulation next month, how many are going to be in circulation next year, 2 years, 3 years, 4 years, we can't even begin to understand. There are these rules and things that are completely out of our control. And what you've seen happen in a lot, especially in countries outside of the West and in countries where they've experienced currency devaluations firsthand instead of reading about it in history, or where they've experienced corrupt rulers and currency failures. Like, imagine if you were in Venezuela and you had worked your entire life unbelievably hard, provided a lot of value to your community, and so had your father and your grandfather, and you would amass the equivalent of $5 million, $10 million US equivalent.
Yeah. What you're saying now is spot on, and I'm not arguing against
I'm bringing it to the next point here. The point that I'm trying to make from this, to build it up, is that what you've seen is that over time you've had these happening since Bitcoin has been out in the wild, and you've seen these as huge adoption mechanisms that get people to try and find a way to protect their wealth, protect their purchasing power. The human brain, your reticular activation system is powerful, right? If you're in survival mode, if you're in danger, you will be able to learn and understand things in a way where you might never have given a shit about Bitcoin, or a way to get your wealth out of the bolivar or whatever your currency is until it matters, right? And so I believe that with where we're at today, you're just going to have a greater and greater portion of the population that says, look, I don't know the rules of the currency that I'm in. I don't know the rules of what is going to happen here, but I do know the rules of a decentralized system that no one can change. And maybe I opt to put 1% of my wealth in that, or 5%, or in a collapsing currency, 50%, everyone will have their threshold, and it will happen over time. It's not like everyone tomorrow is going to be on a Bitcoin standard and say, I'm going to put like 50% of my wealth in. But I think over time, more and more people are going to be forced to learn about it through unfortunate means, and more people are going to see what's happening and put a greater proportion of their wealth in there. I don't know the exact amounts. I'm not going to act like I do, but those are the data points that I've been looking at. And I think that if you look at the growth rate, since 2009, Bitcoin's done very well. Of course, it's a very small asset class from where it was back then. Most people were not able to hold on to their Bitcoin for that period of time. I do think that every single person who owns a lot of Bitcoin today, I think that they're going to end up losing it. They're going to end up losing it. They're going to end up investing it. They're going to need to pay bills, things like that. It's still a very early stage, but you're 100% right. I mean, a lot of the Bitcoin has been mined. A lot of the Bitcoin has been lost. A lot of people are not in a place where they want to take responsibility of owning Bitcoin. And, everyone can take their own place in the ecosystem and opt for whatever they want.
Yeah. Well, there's a couple things there. So one, I think that, and people in the U.S. tend to look at things with a U.S. lens. As the world becomes more global and information share is more rapid, the understanding, or the ability to understand things from other perspectives, needs to become more apparent. And the fact of the matter is, having each country having its own unique currency makes sense in a non-connected global economy. But in a fully connected electronic global economy, there's really no reason for many countries. They absolutely should not have their own currency, because you will eventually, it'll come to roost at some point in time. You will get those environments where they can, Turkey or Argentina, where you have 30,000% inflation, and that is purchasing power erosion. And there isn't an easy way, say it's the dollar, right, to move into the dollar, to move into the euro. So having Bitcoin as a decentralized global currency system makes a lot of sense. And from a grassroots standpoint, like I 100% get it. Like if I was living in Argentina or Venezuela or Turkey or, Nigeria, right? 100%, 100%, a totally different perspective than the perspective I have now. The U.S. dollar is designed to be spent. The U.S. government does not want you holding dollars under mattresses. They want you spending it, right? So it erodes value by design. I think Bitcoin is a great instrument. I think from a narrative standpoint too, and a way we talk about it, right? 30,000 Bitcoin, 60,000 Bitcoin. I think it would do a lot better if we talked about it in like a sats perspective, right? Maybe that's too many zeros, but like ultimately it's divisible up into what, 100 million, per Bitcoin sats, right? Because the fact of the matter is that, psychologically, and you made this point, right? Like it doesn't change human psychology. People are always thinking they missed a run or missed something, or how can you buy Bitcoin here or there, right? And there's all sorts of math you can point to, but the fact of the matter is, if your Satoshi is your spending unit, not your full Bitcoin, like I'm not going into Whole Foods and dropping a Bitcoin on groceries, but I might, spend whatever, 1,000 sats or something like that. That wouldn't buy me anything now, but maybe in 10 years it does. And it becomes a little bit of a different, but it is your savings account, right? It is your checking account. And the reason why interest rates exist is to, not to make money, it's to guard against the erosion of the dollar, right? And sometimes inflation is lower than that payoff, and sometimes it's higher, and you're still losing money on a real basis. So, I'm in total agreement with everything you're saying. I just think it'll be very interesting to see the way it plays out. But I think the more people, especially in the U.S., look at it from a global perspective and ask themselves truly, like, what is the alternative? It's a tough question to answer. It's a tough question to answer, especially the fact that it can't be seized, right? If you're in Venezuela, not only do you have to worry about, inflation and hyperinflation, you have to worry about government coming and seizing your personal property. Apparently, it happens in the state of New York too, but that's besides the point.
Yeah, well, the big piece is how you can guard your property as well. So let's say that same example, you're back in time and you've got $1 billion worth of real estate. Well, if you've got $1 billion worth of real estate and something happens geopolitically in your country, I mean, what happens if you were one of the oligarchs that Putin decides, hey, I'm just going to seize all of your assets? If you cannot defend your property, then it can be seized. And are you going to travel with $1 billion worth of gold to another country? There's always counterparty risk. And so this is another thing which, in terms of going back to the question, how would you protect yourself over the next 100 years? Even with the benefit of hindsight today, it is very, very hard to say if you were living in most countries, I don't think you could have protected your billions of dollars for 100 years. Or it would have been very, very difficult, and it would have been a full-time job with a full team under a very, very smart leader. But the thing that's magical about being able to protect your wealth today for the next 100 years is that now you don't have to deal with the level of counterparty risk that you would have had to have dealt with when you're dealing with physical hard assets. Because now you've got this digital store of value where you could have $1 billion worth of property and spending power memorized in your head. And you can go over a border to another country, and it doesn't matter if the people on the board, like if you're a Ukrainian and some guard wants to seize $10,000 worth of gold, $100,000, $1 million worth of gold, you can go to this other country and build a great life for you and your family. And it's because you were able to secure, without any counterparty risk, billions of dollars worth of property, hundreds of millions, whatever the amount is, in your own mind. And I think that is a foreign concept that we've never seen before, because the technology has never been at the level that it is today. And it's still very early days. And I don't think even in the next 20 years, people are going to understand that concept that we just talked about here. But it's a powerful one. And it's one that I'm telling you, very, very rich people are going to forcibly have to learn about. Not just the people escaping the Ukraine or Venezuela or wherever, but the billionaires who are getting their wealth stolen and realizing, hey, I thought I owned this yacht. I thought I owned all this land. I thought I owned this mansion. Well, heck, you don't own any of it.
Yeah. I mean, look, I think, again, depending on where you are in the world, 100% true. I think in the U.S. there is an element of that scares people, right? Being your own counterparty, right? Because if I lose my passphrase, or I lose my ledger, or I lose, I was listening to a podcast of a community I'm involved in where the guy had a seed phrase of Bitcoin in a piggy bank, and his wife donated it, and now it's in some landfill, and it would have been worth $100 million now, right? There's no brokerage or SIPC protection or FDIC protection or entity that, because counterparty is about trust, right? And yeah, trust can always be violated, but like there is a, and this is just cultural, right? Like there's a sense in America where like, I know I don't have to worry about my money because it's being protected by Bank of New York or Fidelity or Schwab or JP Morgan or whatever it is, right? As opposed to like me having to worry about a passphrase that someone could steal or hack or something like that, right? And then if I do that, there's someone I can call, right? I can't call the CEO of Bitcoin to get my money back. And that, I think, is just a mental hurdle, right? That some people are, and it's just a different, and philosophically, right? Other parts of the world are going to be totally different in their view of that. But I think that's going to be tough for a lot of Americans, and I'm sure people in other countries too.
Yeah, no, that's a spot on point. I think that this idea, it's a tremendous amount of responsibility. If you're going and saying, hey, you're going to take the full level of counterparty risk and responsibility for your assets and the responsibility of really guarding them rather than guarding a property or gold or whatever it may be, you have to guard that seed phrase. I mean, the best thing to do would just be to memorize it or find some way to distribute it into different areas, or if it's your big pile of all your money in the reserve, just finding a good way to make sure that you can continue to access it and protect it. There are solutions that are more technically built for people who want to do that out there, but I completely agree with you that I do not think people should do that unless they are really, really competent and understand these things. And I think every single person who's gotten to that level of competence to be able to manage multi-sig wallets and distribution, understand these seed phrases, it's something that they built up over a long time, and they've probably lost money or lost seed phrases or, I mean, the early Bitcoiners, this is the other thing. I feel like almost every other person that you speak with at some point in time about Bitcoin will say when they were in the early days, they lost their seed phrase. They lost this, they lost that. It was on an exchange. It got hacked. It got stolen. I mean, this is something that is a big hurdle to overcome. And I think that there are going to be more and more good services that arise that make it easy for people to interact with and own Bitcoin. But if you want to fully remove counterparty risk, it is something that you got to take your time and study on how to do.
Mm-hmm. Yeah, no, absolutely. I think you're spot on. You're spot on. So let's we've been talking for a while. Let's circle back in terms of just Sazmining and how I guess listeners can get involved, because basically you would go to the website, you sign up, and you can, in essence, you're purchasing or investing in the mining equipment, which is in your hosted hydro facility right now, and on a periodic basis, I don't know if it's monthly or what have you, you're in essence getting the mining rewards for Bitcoin. So there's some sort of payback period. I guess one is that pretty accurate, right way to look at it, and where do people find it?
Overall with Sazmining, we tried to make Bitcoin mining accessible. So you can go onto sazmining.com and you'll see that you can select a number of rigs and actually become a Bitcoin miner. Our tagline is we make it as easy as signing up for a Netflix subscription. And so you buy a mining rig and then we take care of everything. You just hook up your own Bitcoin wallet. So we never touch the Bitcoin. And then all the Bitcoin that's being mined on this hydropower from your machine is getting deposited into your Bitcoin wallet. And so it mimics that type of approach where we said, look, there's this large contingent of people out there that want to be able to access Bitcoin mining, but your time's too valuable to go and figure out how to master it. So we brought all of our experience, all of our connections. We locate the best sites available that are powered by renewable energy, and we allow you to tap into it just through going through a simple checkout process.
Awesome.
Yeah. Oh, and one last thing to note is that we also, in the early days when we were building the company, I mentioned it, we started back in 2018. We've raised a number of different rounds of capital. And you know this probably better than most people, that when you're raising capital, it's very difficult to access those investments in early stage companies unless you have accredited investor status. You're worth over $1 million. You've been making a few $100K the past number of years. And this holds many people outside of these types of investments. And so we have raised from angels, family offices, funds in the past. But before this scale up of the next leg of growth for Sazmining, we decided to partner with Start Engine, which is a crowdfunding campaign. And if you go on to startengine.com/Sazmining, or we've got a link on our website, and you don't want to buy a rig, but you'd say, hey, look, I think that what Sazmining is doing is really great and has a lot of return potential, then you can go and actually own part of the equity in Sazmining. So become a part owner of the company, join our communities, and stay connected with us that way. So the best places to stay in touch would be either through the product as a customer, through an actual owner of the company, or following our podcast or other social medias.
Awesome. Well, Will, I know you get to run. I appreciate the time. I'll definitely learn more. I'm going to look into becoming a customer too, because I think it's a really cool idea, and love talking to you. So best of luck, and hope to talk again soon.